Hi student. Okay, for today, I want to do a micro lecture video. So that this one is for your revision, extra revision. And what I want to talk about is cost concept. Okay, when we talk about costing, which is the name is costing, and the name is managerial accounting. Even though it's not focused solely on costing, this is part of financial accounting, extension of financial accounting. But mainly, what we will learn throughout the semester is all about to calculate costs. We have method technique of managerial accounting that we need to know in order to calculate cost. Okay, let me start now. First, what is manufacturing cost? Okay, manufacturing consists of activities and process to convert raw material into finished good. Okay, finished good is the end product, which is when you go to the store, then you want to buy clothes, you want to buy books, you want to buy handbag and everything. That is a finished good, which is the good is ready to be to be sold to customer. Okay. In contrast, merchandising firms sell goods in the form that in which they were purchased. So it's different. If you are a retailer, you sell good in the form that you are purchased. If you get the supplier, the handbag is from supplier, that is how the handbag will be sold to the customer. Okay, manufacturing costs are typically classified as direct material, direct labor, and manufacturing overhead. Okay, I will explain you more in costing or managerial accounting. There are several costs that we need to know. First is product cost, period cost, we have prime cost, and we have conversion cost, we have a different kind of cost, but this is the main thing that we need to know: product cost and period cost. Under period cost, we have direct material, we have direct labor, and we have cost overhead. But in period cost, we have general and admin expenses. This is called expenses, and selling and distribution. Okay, normally this one is these expenses, which we put it in income statement. But product cost is actually inventable cost, which is product cost, all the costs that incurred in produce this product is actually attached with inventory. Okay, it's okay if you don't understand this part, I will explain it later. Okay, the first thing first, when you want to do business, we have to decide whether we want to do retailer, as a retailer, or as a manufacturer, or as a service provider. Okay, what is retailer? Um, previous slides said retailer actually sells the good as you receive from the supplier. That is I paraphrase it. Okay, for retailer, you get your product from supplier, and how you buy from your supplier, that is how you sell to your customer. So let's say you want to sell handbag, so you call the supplier and say, okay, I want to buy, I want you to supply me handbag, different kind of handbag, and according to the maybe according to the season and everything, or maybe you customize your handbag, then you order from your supplier, and how you receive your product from your supplier, this is how you sell to customer. But manufacturer is actually you produce your own product, you manufacture, and then you sell it to customer. Of course, there will be a series of process from factory, then we go out to the warehouse, and you will distribute, then you will go to your customer. Okay, service actually, the service provider, what kind of business you want to involve. And I'm really sure most of you guys are thinking to be accountant. Maybe after you graduate from university, you want to be accountant. You can open the accountant firm, or maybe lawyer firm. It can be a clinic. This also provided service, medical service. And what else? If you love to singing, if you passion in music, maybe you want to have a production house. Okay, when we talk about product, to complete as a product, of course we will have cost, right? Okay, let's say you want to do maybe you want to do open the furniture uh, you want to open a furniture maybe furniture factory. So in order to finish one product in for your business, of course we have a material, what is your product is made of. So that's why we have direct material, and we have direct labor, and then we have overhead. Then after you have these all three, and you will have your own end product. It's just like if you want to sell, even if you want to sell a very simple product, it's just like lemonade. What we need to do the lemonade? Of course, we need sugar, we need water, and then we need lemon. So this is your material, and this material have cost. And this lemonade, someone have to make it to sell to your customer. But there will be extra costs, such as your seller, and maybe your employee. So you have to pay for labor, and those who make this lemonade, the very refreshing lemonade for your precious customer. Okay, now we go to material. We have two different kind of material when we want to do product. First is raw material, basic material and part used in manufacturing process. Second, we have direct material, raw material that can be physically and directly associated with the finished product for the manufacturing process. Okay, raw material actually what is the component of your product. Let's say if you want to sell a mineral water, even though a very simple mineral water, what is the raw material that you need to have in order to produce your mineral water? Of course, you need water, you need bottle, right? So this is your raw material, water and product, which is these two is directly traceable, and we can see let's say What else? Maybe you want to produce a book. What is the raw material for book? Of course, papers. So papers is the main material, and it's traceable. You can, it's physically and directly associate with the finished product during the manufacturing process. So for direct material, we have two. One is traceable, which is we can easily trace that this component is in your product. But they have material which is intraceable, not traceable, which is called indirect material, which is something that we cannot, the cost that we cannot trace. Okay, let's say we want to you want to produce a car. Okay, this is a car. You have a factory car, automobile business. So this is a car. I am not a artist. I am an accounting student. Okay. How 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 this is a car. Okay. Oh, my car have a face. So this is a tire. Maybe this one is steering. Like this. Steering. Okay, we have to put handle here, otherwise the driver cannot get out from the car. So, what is the material that you need to do to make a car? First, of course, you have metal. That, Then maybe you want a leather seat. Then steering, tire, and window. This man is not included in production. Otherwise, we need so many people to be in the production. Okay, this is your raw material. This is what we call raw material. And it's traceable, of course. And if the cars don't have tire, so it's not named a car. Okay, so there will be a material which is not traceable. It's very small, and all this material you can identify the cost, which is traceable into the cost you need. And some of the indirect material, which is can be screw, very small thing, maybe glue, something that we cannot trace to the product, into the product. So this is, we call it indirect. Okay, when we talk about traceable, is traceable to be included or to be calculated into a cost object. Okay, this is one example. Another one example, maybe you have a firm, then your firm has product 1 and product 2. Then, what is the cost to produce product 1 and product 2? First, maybe product 1, you need wood. And second product, you need steel. Okay. first product, you need wood as your direct material. And then, but second product, you need steel. But you don't need wood. But first product, you need wood, but not steel. Okay, this is considered direct material. If each wood for one product is cost you $5, so the cost for direct material for product 1 is $5. So the steel for product 2 is cost you $10. So the cost for direct material for product 2 is $10. So it's traceable. It's traceable into a cost object. So indirect, which means we cannot count the small thing, just maybe like screw, glue, and anything. So we call it direct material. So direct labor is someone who will gather this, assembly this product to be a finished product from raw material. You just buy wood, then someone, this person will assembly this wood to become a product. The one who touch your product is considered direct. But there will be someone who's still working in the factory, but he is not touching the product, but he is a manager. So this is, we call it indirect, because he not touching the product, which is we cannot trace. So this is an overhead. Okay, now we continue to indirect material. Raw material that cannot be easily associated with the finished product, which is, I give you example just now, screw, it can be glue. If you want to do a product, book, paper is your, if you want to if you want to produce a book, so book is your, paper is your direct material, glue is your indirect material. Okay, not physically part of the finished good, or they are insignificant part of finished good in the term of cost, which is we cannot trace. Paper is, of course, we know for each book we need maybe paper cost you $10. But glue, if one bottle of glue, it costs you 15 ringgit, but this 15 ringgit can make 5 book. How to trace? Or maybe more and more. So we cannot trace. How to trace the $15 into each product? Here we already know each book is $10. So this is $10, this is $10, this is $10. Alright. So this considered as manufacturing overhead. Okay, in the dictionary, overhead means extra cost. So that's why overhead is something different from direct material and direct labor. So indirect material, indirect labor is considered overhead. Okay, what is labor? Work of factory employee that can be physically and directly associated with the converting raw material into finished good. Indirect labor, work of factory employee that has no physical association with the finished product, or for which is impractical to trace cost to the good product. Okay, same with direct material. Direct material, those material that are physically related to the product. Same with direct labor. Direct labor is, this is raw material. Okay, you have a factory. How to draw a factory? Like this, or like this. Okay, it look like crocodile. Okay, this is not factory. This is crocodile. Okay, we have a book factory, which is, to make a book, we need paper and we need all the indirect material. So we have direct material and we have indirect material. So in the production line, we have the reel there, which is, this is the machine. So this is your labor. Okay, let's put some hair. Okay, what is happening just now? Okay. Oh, they are still here. Okay, hi guys. This is my workers. So, this is your staff and this is your staff who will assemble from paper, and the paper will come here, and then they produce books. These people that we touch the product. So this is the direct labor. So then your end result, you have a good book to be distribute to your customer. So maybe this is Harry Potter, or maybe this one, what else? Okay, but indirect labor, those who are not touched. This is a touch with love. Okay, they made it the book with very responsibility, and then this produce become a book. Okay, for indirect labor, those who are not touched the product in order to make a product. So maybe they can be a manager, it can be a cleaner, it can be a tea lady, it can be what? Your executive. But all of this will happen inside your factory. Okay, remember, all the cost is whoever involved in the factory. Okay, we continue. Work of factory, okay, what is indirect labor? Work of factory employee that has no physical association with the finished product, which is impractical to trace cost to the good produced. So normally direct labor, we will calculate them based on cost, based on labor hour. How to call hour? Okay, labor hour or machine hour. So if this one book required 1 hour to produce one full book, so 1 hour will cost you $15. So this is your labor hour. So one book is 1 hour. So we easily trace that direct labor for the book, one book is $15. But the manager, salary of manager, cleaner, tea lady, executive, we cannot easily trace the whole cost into the whole product. Okay, now we continue. Manufacturing overhead. Okay, we have a very nice factory here. Okay, costs they are indirectly associated with manufacturing the finished product. Include all manufacturing costs except direct material and direct labor. So the other way around, other than direct material and direct labor. Allocation of overhead to product can present problem. All call factory overhead indirect manufacturing cost or burden. So we can call it factory overhead and we can call it indirect cost. Okay, this is the problem in costing because direct material we can easily trace. So the material for this book papers is $10. Direct labor for this paper, this book, 1 hour to produce one book, and the company will pay you $15 per hour. So if the company produce 10,000, so it means 150,000 direct labor as a total. But manufacturing overhead, it can be varied. It can be electricity, it can be utilities, salary of everyone other than direct labor. It can be what else? Plant and equipment and so on. So what we have to calculate is total cost. Total overhead cost. Total. So this total we want to assign to your product per unit. Look complicated, right? So that's why in costing we have method, techniques to calculate your overhead in order to trace the overhead cost into each product. Okay. Now we move on to review question. Which of the following is not an element of manufacturing overhead? Sales manager salary. Yes, because the flow will be like this. The flow will be like this. The product cost is actually whatever happened in your factory. This is your factory. Better, right? Don't look like crocodile, but it look like durian. Okay. This is your factory. Whatever happened inside your factory will be considered product cost. So because you are producing your inventory. So we have product cost here, which involve direct material, direct labor, and cost overhead. Whatever cost which is happen inside your factory is your product cost. But once you already packaging your end product to be distributed, this is to be distributed by how to draw a truck like this, but it look like a turtle, a very cute turtle. Okay, it's cute turtle. Okay, this is your truck, and then someone will loading this truck, all your finished good inside the truck. Okay, once your product is going out to from your factory, so from this point, this is your product cost. This is your period cost. So that's why we have general and admin, which is anything that related to from warehouse distribute to customer, and selling and distribution. Okay. So this is your warehouse. Any cost that relate from after your product is going up from factory to your customer. This is your customer. Customer. Oh, so many customer. Okay. From here to here, we call it period cost. Why we call it period cost? Because we want to, because period cost is actually an expenses occur. When this occur, we will have a time frame to record the expenses, which is a year. Sorry. Then we will put the expenses in your profit and loss account, which is income statement. So that's why we call it period cost. Okay. Another thing that I want you to know is product cost is inventorable cost. Why we call that? Because what we produce in this factory is our product, and actually our product is our inventory. So what is inventory? Inventory is our asset. So in order to as long as we don't sell our inventory, so the cost will not flow out from the business. So let's say year one, we produce product cost. Okay, product cost and period cost. This is year one. We made 80,000, total of the 80,000, roughly, product, direct material, direct labor and overhead, and period cost 30,000 for the year one. But we don't sell, no sales. Then this is considered as inventory. This inventory we consider an asset. But in year two, we don't have any, no production. We assume no production. But we sell all the product. Okay, so product cost is 0, but period cost is 20,000. Okay. When we sell, okay, inventory product cost is actually the cost that we flow. Cost that flow in the business. The cost that flow. Okay. Yes, the cost that flow. Why would I say flow? Because when you don't sell your product, which is finished product, this we consider an asset, right? So if this is an asset, um, okay, asset is on your debit side, and they will remain in your it will remain in your business. But once you sell it, this is considered cost of goods sold. Cost of goods sold, COGS. Cost of goods sold we consider as expense to expense to revenue. Okay, and expense to I try to I can write it. Okay, this is considered as expense to revenue because in profit and loss, revenue is minus COGS, right? So cost of goods sold will reduce the revenue. So that's why we call it cash flow. No cash flow, sorry. Cost that flow. Because as long as the product is not sell yet, so we call it inventory, it's not flow out. And once it already sell, so it will be cost of goods sold. But period cost is the expenses that occur, which is we just straight away recorded into your transaction and we will put it in income statement. So hopefully you understand. Then not element of manufacturing overhead, sales manager. Okay. Product cost. Okay. Component direct material cost, direct labor cost, manufacturing overhead. I already told you. Costs that are necessary and integral part in producing the product. So this is physically traceable. Recorded as inventory, I told you, when incurred, those may be called inventorable costs, not an expense. Until finished good is sold, then cost of goods sold. Okay, I already explained. So what is period cost? Match with revenue on a specific time period and charge as expense as incurred. When we talk about period cost, is actually a expenses that already occurs and recorded. It is non-manufacturing cost deducted from revenue in period incurred to determine net income. So profit and loss. Okay. Sales minus cost of goods sold, we get gross profit. And then from gross profit, we add income, we less expenses. So these expenses, normally we have general and administrative, selling and distribution, and finance. Is it finance? Okay. From here, when we deduct the expenses from revenue, then lastly we get either profit or loss. Include all selling and administrative expenses. So this is the summary. Product cost manufacturing. When we talk about manufacturing, anything happens in your factory. When the product is go outside your factory, by truck, so distribute by truck. Okay, uh, distribute by truck, so this is consider your, okay, this is considered as your period cost. So normally is selling and expenses and administrative expenses. So now we go to the cost behavior. How costs respond to a change in activity level within the relevant range. Relevant range, activity level within which is give a total fixed cost or unit variable that will be unchanged. Okay. Now we talk about fixed cost. What is fixed cost? Fixed cost, the easiest word that we can call it is fixed. The expenses that fix. Fixed cost and the cost that is fixed. They have second is variable. Variable actually is how they change according to the activity. How the cost is changed according to the activity. So people say, okay, it's fixed cost. It's fixed. Nothing we can do about it. But we have to know that some of the cost is not fixed forever. That's why we have relevant cost. So fixed actually when the cost is constant. Why I say it's constant? Because if you have a factory, let's say per month you have to pay electrical costs, electrical bills. Maybe can cost you 50, can be 5,000 per month. 5,000 per month. So is when you talk about factory, of course we focus on production, right? Okay, if the company, your factory need to pay on June 5,000 per month for electrical, your production is 1,000. Production is one. Okay, when we play with technology, this is what happened. Okay, June is 5,000. So this is 1,000 unit that the factory produced. Okay, in July, you still have to pay 5,000, but you produce 10,000 unit. So it's constant, right? You still have to pay 5,000 even though you produce 1,000 for June, and second month you produce 10,000. So from here we know that the total amount is constant. But what if you want to trace this cost, electricity cost, into each unit of product? Let's say product per unit is 5,000 divided by 1,000 is $5 in June. In July, 5,000 divided by 10,000, so it to how much? 50 cent, is it? Oh, 50 cent. So as you can see here, product per unit is changing. They have change. Oh my god, what is happening? Okay, change. But and but in total is constant. Okay, I give you another example. Um, ooh, look more nicer. Um, I give you another example that we have a factory to produce trucks. Okay. I don't want to draw a truck so because it look like a turtle. Okay. This factory is to produce truck. So in order to do this business, we have to pay a business license. It's not business license. Sorry. Plant. We have to buy a plant and machinery for 50 million. Okay, we want to produce a truck. Okay, when we see here, this is one machinery. So we have it here 50 million. So it's constant. It's constant, right? Even though first month you produce 10,000 unit, you still have to pay for the machinery for 50 million. It's one off. So the cost it will be calculated. How about second month? You produce 20,000. Third month increasing by 30,000. And the fourth month is 40. First year, not month. Sorry. First year is 10,000. Oh, oh. First year is 10,000, second year is 20,000, third year is 30,000, fourth year is 40,000. So as a total, the amount is constant, right? But in when we want to calculate based on the product per unit, so the amount will be lesser and lesser because we are producing more and more product. So that is the total cost. So it will be like this. This is the behavior. Is how fixed costs behave. But we must produce within the relevant range. What is relevant range? Is which mean we still can produce within the capacity. Let's say, for example, this 50 million machinery can produce 50,000 truck. Sorry. This is the maximum capacity. We cannot say that the fixed cost is fixed forever. We can say, okay, how many truck that we want to produce, the cost will be 50 million. No. When the truck is exceed, production is exceed 50,000, so we need to buy another new machine, which is 50 million. Then we can produce another 50,000 truck. So when we call it relevant range, is from 0 to 50,000. So this is our relevant range. So if we want to produce more than 50,000, then we have to buy another machine. So This is how the fixed cost behave. Variable cost. Variable cost is changes within the activity, which mean based on unit produced and maybe we base on our work. Okay, variable cost normally is per unit is fixed because we already know how much per unit we have to we can trace the cost, but in total will be changed. Why? Okay, why is behave like that? I give you an example that we have a lemonade stand, which is we have one small table outside our house, and then we have jug here. Why my jug look like a mango? Okay, I think yeah, this is a jug. And someone will sell the lemonade. Right. Okay. In order to produce a lemonade, of course we have a cost. This cost that we have to calculate, which within each unit of the product that we want to produce. Let's say to do a lemonade, we need a lemon and sugar, which is can cost you $1 for each cup of lemonade. Let's say if you sell, this is fixed, per unit is fixed because we already know. Then let's say if you want to, if you sell, let's say here, oh no, no, keep, okay, stay here, I will stay here. No, this is why. Ha. Okay. Huh? Now what? Okay.